Now, the last chart that I want to highlight, and again, if you spend any time on this channel, you'll know that I spend a lot of time focusing on the realized cap because it really is the backbone of so much of this analysis. And what we've got here is the realized cap in orange, but down the bottom is the realized profit. Now, just to give you a bit of a framework here, when a coin is acquired at a lower price and spent at a higher price, somebody else has to come in with more capital than the original purchase to buy that coin. So that represents a capital inflow. So the seller, the person who bought down at say $10,000, is realizing a profit, which is what this green chart is showing. And somebody else is coming in with that extra capital, injecting new capital into Bitcoin. The realized cap has been on an absolute tear, pushing up to a new all-time high of about $530 billion. So we have got an all-time high in capital invested, saved, stored within Bitcoin in the on-chain sense. So these are people who have acquired their coins, sold them to somebody else, and that new buyer has essentially revalued the coins to a higher level. Now, that's why we can use realized profit, which is currently up at very high levels, about $3.5 billion per day. It has surpassed the peak that we saw on this first correction here in 2021, which got to $2.3 billion per day. So that means that all the coins that are moving, most of them out of that long-term holder supply, are being revalued from a lower cost basis to a higher one, and the delta between the original purchase price and now is about $3.5 billion every single day. If you take all of the net realized profit, and that is why we can use realized profit and loss to actually model out capital inflows. Now, in a bull market, typically realized profits dominate naturally because price is moving higher, people are revaluing coins from low to high. Atypical behavior is that realized profit will dominate. But of course, there is a point in time when realized losses will start to kick in. And that is another metric we can look at because realized losses will pick up during corrections. It will also pick up as the bear market kicks into gear. When lots of people buy the top and they panic sell, you'll get an exponential increase in realized loss, going from not very much at the top to something more meaningful as the market trades lower. So just giving a bit of a framework, the realized cap is on a tear up to a new all-time high, and the market is currently locking about $3.5 billion of realized profit per day. Of course, there's other coins moving around the system. There's going to be futures markets and ETFs and all these different components. But generally speaking, we're looking at a period of net capital inflow, but this is, of course, balanced by the fact that this is sell-side pressure. These realized profits are the sell-side pressure that ultimately puts tops in at some point in time, whether temporarily or on a macro scale. But we can certainly use this to model capital inflows and just understand the amount of money that is now moving into the system.